We are excited to welcome back Loveneet Bains. Love, how are you?
I'm fantastic. How are you guys?
We're doing good.
We are super grateful that you're able to come on. For those who don't notice, time of day looks different. We're recording on a Friday afternoon. You got the notice yesterday, and you're coming in with some heat about a whole bunch of different topics in the escrow world, since I think right now the escrow podcast that we did with you is one of the most viewed episodes that we've had in our darn near 100 podcasts.
Awesome. Well, this is going to be the most viewed one then.
All right, welcome back to the Pursuit of Property podcast. Today, we are super happy to be hosting a familiar face, rockstar entrepreneur. She's been in escrow for a super long time, is buying up multiple businesses in Fresno. She probably owns half of Fresno by now, but we are excited to welcome back Loveneet Bains. Love, how are you?
I'm fantastic. How are you guys?
We're doing good.
We are super grateful that you're able to come on. For those who don't notice, time of day looks different. We're recording on a Friday afternoon. You got the notice yesterday, and you're coming in with some heat about a whole bunch of different topics in the escrow world, since I think right now the escrow podcast that we did with you is one of the most viewed episodes that we've had in our darn near 100 podcasts.
Awesome. Well, this is going to be the most viewed one then.
There we go.
I like it.
Last one.
I like it.
There's a lot of info that we wanted to talk about. Obviously, let's do a quick recap on who you are and what you do for those who maybe haven't seen the original episode. You're with Chicago Title. Can you explain your position there and what you do?
Yes. So I work at Chicago Title Company, a local title and escrow company in Fresno, and I am an escrow officer. I have worked for the company for 8 years. I run a team of amazing women. We rank in the top 2% in the nation within our company across all of the brands.
Hell yeah.
Yeah.
Boom.
That was big
Out
too.
of little old Fresno.
There you go.
So yes, we handle a lot of transactions. We see a wide range of transactions, problems, but we're here to try to solve them all and get everything closed for the clients.
Absolutely. Well, we'll do like a shameless personal plug that we use you guys for pretty much all of the escrows that we have control over.
Yep.
So if you're an investor or a realtor, you guys kind of handle everything.
Yes.
And I'm not going to name drop anybody, but I've had other agents and investors request certain escrow officers who couldn't do some of the stuff that we do. So if you guys are on the other side of the camera and you get any info today, especially from Love, bring the business back, because Loveneet actually is one of the people that we trust personally.
Yep.
So
Thanks, guys.
there you go. Little free plug at the start here. So when we were talking before the podcast, you had a couple ideas of what you felt was important to talk about. One of the things that I think all of us for the last 6 months have been hearing a lot about is the seller financing world. And we've talked about it a little bit on the investor side of how you negotiate seller financing and how it all plays out. But we've never actually talked about how seller financing plays out in escrow and how you actually implement whatever you agree on. Is that kind of what you wanted to talk about a little?
Yes, please. So let's start with, if there's an agent involved in the transaction and you're using car forms, there is a car form that will help you outline all of the seller financing details that we need.
SFA?
Yes, correct. And I've always told agents, if you guys need help filling out the form, just give us a ring, because there's a lot of items on there that may or may not be applicable to the client situation. I have some agents that just mark every box, and that's not correct.
Gotcha.
So I like to be able to walk people through what information we're going to need. So you can always call us when you have those types of transactions. But basically, in order to draw up the paperwork for seller financing, we need to know what the principal amount is going to be for the loan, the interest rate, confirm with the clients what payment they are expecting, because they may amortize the loan over so many years. So you may say, okay, it's amortized over 30 years to reduce the total payment amount, but then there may be a balloon payment or something like that. So any additional terms that the clients want to include in the documents, we can add those for the most part. And then we draw up 2 documents. There's a note and a deed of trust.
Right.
A note is the document that is the promise between the buyer the borrower and the lender to pay back the loan, and it details out all the terms.
Yeah.
The deed of trust is the document that is the security instrument against the property. That makes it public record that there is a loan against the property, and in the event that a lender needed to foreclose, that it details out all of the terms of the note with respect to just it doesn't show the interest rate or the payment amounts. It only shows the principal balance. But it does have other legal language that's included that details out the agreement between the customers.
Gotcha.
Now, you mentioned that's if an agent is involved, right? With an agent who has access to car forms and that specific car form being the best to use. When you've seen, because obviously you guys handle a lot of investor clients that are using, a lot more concise paperwork and not car form looking paperwork, right? For investors who have put together seller finance deals and they're bringing the escrow deals to you, do you typically like them, if possible, to be using it on a car form? Have you seen them using a different form with just that same information lined out? How does that go for you guys?
So if there's not an agent involved, we can literally take the information over the phone, or preferably you put it in an email and detail out everything. That way we can save the instruction in our file for where we got this information from, for who told us to draw the note and how they wanted it to be done. And then we drop the paperwork accordingly from that and have everyone execute it. At closing.
It's cool you brought this up, because whenever I talk to private money lenders, which it's a similar process for private money, they're always confused on, one, how do we know what our payment and what all the terms are? And they're also concerned on what happens if you fail to pay, right? Those are like the two main questions.
Correct.
It's the same process, right? So you always draft up a promissory note that shows, okay, this is what's being paid, how it's being paid, if there's late fees, prepayment penalties, balloon payments. You pretty much spell out every term that you've agreed on.
Correct.
But then the document that actually protects them, the same way that it would protect like a normal bank, is that deed of trust, right?
Yes, correct. And when we go through escrow, we're also issuing a title policy to the lender. So we're ensuring to them that there's no other liens, that they're in first position or whatever position they decide to be on. Because with investor clients especially, sometimes we have one person funding the purchase, but then someone else doing the rehab. The rehab lender is going to need to accept and understand that they're in second position. And in the event that there's a default, they may or may not get paid. So it's just something to keep in mind for a foreclosing position. We can talk about foreclosures too. So in the event that when you have a seller finance or any private financing or with a bank, the client can contact our foreclosure department in the event that someone doesn't make a payment, and they can start foreclosing proceedings. I have to get back to you guys on the exact timelines on how it all works, but there's a certain amount of time that has to pass between the last payment date. There's notices that you have to send out.
60 days, I think, is the general rule of thumb. No.
After it.
I think you have to be more than 60 days late.
Okay.
And then if you pay, then you reset the calendar essentially.
Correct.
That's why foreclosures can take so long.
Yes. And then there's also notices that you have to send out before you can actually record a notice of default.
Similar to an eviction, right? Like your notices have to go out.
Correct. Yes. So a notice of default will get recorded, and then so much time has to pass by, and then the notice of sale goes. And then a sale date can be set in the event that someone stops making payments and you're in first position.
Right. So, I mean, we're kind of talking a very, very niche section of escrow, but I kind of want to cover that title policy you were talking about.
Sure.
Because title policy, if you haven't closed a deal yet, you don't realize that that's one of the bigger line items in the closing statement. And so if you're the buyer and you're paying all the closing costs, you're going to say, well, what's this, $1,300 or $1,800 or whatever the amount is, and what does it do? So you're saying that the title insurance is for the lender to say that, hey, we've double checked everything and cleared to make sure that there's no ongoing lawsuits, there's no outstanding liens, there's no other pretty much anybody else who's entitled to the property that we can find.
Correct. So we are issuing the title the title report is another disclosure. So we are telling the clients, the buyer, the seller, the lender, this is what we have found. It's the seller's responsibility to review the report, though, and tell us if there's anything else that is outstanding. There are times where some things are not of public record. So, and there are line items and exceptions to the title report that will talk about any unrecorded easements, unrecorded agreements, loans. So if, for example, if we have a title report that comes out and there's no loans against the property, the seller's going to sign an affidavit for us confirming that there's no loans against the property.
That they're aware of, right?
Yes, correct, that they're aware of. And then we take the title report, we give out prelim approvals. There's certain items that we will omit from the title policies, but all the items that are listed on the title report are called exceptions. So we're saying these exceptions are things that we're disclosing to you, and these are things that you can't file a claim about later on. These are exceptions to your title policy. So anything else that comes up, depending on the type of policy too that you get issued, we do try across the board to issue what's called an ALTA policy. For investors and private lenders, they get a CLTA policy. We only issue ALTA policies to homeowners and to institutional lenders. It's a CLTA policy if it's an investor or private financing. So there is less coverage. I can send you guys a breakdown of what the differences are between the policies.
So that you said it's LC.
There is an ALTA policy, so ALTA, and CLTA.
So the CLTA is what a lot of investors are getting for non-primary residence, non-traditional lending.
Yes, correct.
And you're saying that, and correct me if I'm hearing you wrong, you're saying that policy covers just less things.
Yes.
Because it's riskier.
Correct.
Generally. Okay.
Correct.
Are they cheaper?
Yes.
Gotcha. Yes. So it's cheaper, but you get less protection.
Correct.
Can investors pay for an ALTA policy or no?
No.
So they are restricted to just their CLTA policy.
Correct. Yes.
Again, more risk, more reward.
Exactly. And then we also issue, since we're on the topic of policies, we also issue binder policies. So binder policy is an interim title policy where you can pay for 10% of the premium that the owner's policy would be. And then we give you a credit towards the policy when you go to sell the property. So for example, if the title policy is $1,000, we will charge you $100 and then give you a credit for $1,000 when you go to sell the property, as long as you sell the property within 2 years.
Got it.
Dude, we're so dumb. We could have made $1,000 more.
On Terrace. We were talking about that when we were breaking down the numbers.
So one of the things that this is, again, having you on is interesting because it's not normally talked about. These are the nuanced things that you don't think about. But when we bought Terrace, we should have known either way we were going to have to do a double close. We were either going to sell it on the open market in a couple months, or we were going to sell it like how we ended up selling it. And either way, it was within 2 years. And it could have saved us $900 essentially.
Yes, correct.
Wow.
Are you sure we didn't issue a binder policy?
You might have. You guys look out for us.
I'm pretty sure we did.
While we're talking, I'll look it up.
While he's looking at it, Love, I wanted to ask you too, because we were talking about it a little bit before the camera started, is both whether you're an agent or an investor, whatever role somebody is playing while they have an escrow with you, whether it's, with, a seller finance deal or whatever it is. Let's use our seller finance example since we were talking about it. What are the do's and don'ts for the way agents, or the questions agents should be asking you or handling themselves with escrow, or investors handling themselves with you and with escrow? Because I know a lot of people can be extremely needy. A lot of people can, try and get more out of people than they need to. So what are kind of the do's and don'ts of, a seller finance escrow with the parties that are involved? So
I will say that ask questions, honestly. I would much rather have too many questions than not enough. I personally really like to have a lot of clarification. A lot of times these, especially with sellers and people who don't have any representation from an agent, they don't know what they don't know.
Yeah.
So it's best to ask as many questions and understand how it's all going to work while we're in escrow. That way there's no problems later on down the road after we've closed. Like I've had people who have reached out to me and said, oh, so-and-so didn't make their payment to me. Like, what are you going to do about it? And there's nothing I can do. Yeah. Like, escrow's closed. I'm done. Yeah. Like, my hands...
Don't call my number. We're out.
Yeah, we're done. I don't service the loan. Yeah. That's another thing, too, though, that I recently actually found out that our company does do, not locally here, but there is someone that offers servicing for loans. Yes.
Okay.
So if you have a client where they are doing seller financing or even just investor private financing, we have a way where
servicing company.
Yes, a servicing company where they will help facilitate getting the payments out of one account and putting it into the other account.
No way. That's really good to know.
Yes.
Gotcha. What'd you find?
I don't know why, but I am not finding it in this 40 email thread. So I'm gonna.
I trust Love. I'm gonna go. I'm gonna go as she did it for us.
We were gonna do that. Yeah. So see, this is why you work with somebody.
Exactly.
Okay, so you guys do servicing too?
Yes, we do mortgage servicing as well. So.
Yeah, one of the things that I think a lot of investors who are using the seller financing model are not thinking through is that over the next 25 years or however long you have this thing set up, who's going to be making the monthly stroke and making sure that you don't miss that payment? Because correct me if I'm wrong, on a lot of these promissory notes, they have very, very short turnarounds for when you can start foreclosing for the seller. Is that a term that you've been seeing? I think it's called a performance deed.
Oh, I don't think I've ever heard about that.
Okay, so this is what I've heard of, and I've never done a seller finance deal, but I've heard of the people who are doing these deals. One of the concerns is in regards to foreclosure, and one of the objections overcome is what happens if you don't pay. And one of the solutions is you can set up a performance deed where if you miss 60 days consecutively of payments, there's like a term where pretty much the seller just goes into escrow and it automatically can start transferring the property back to the seller and turning it back to the seller's name. And it's this weird ass thing I don't know all about.
I have a feeling that this might be something that happens in other states. We live in California.
California won't allow any of this performance deed shit?
I don't think that's a thing in California. Just given how much power tenants have in this state. So
the person who I talked to did buy this stuff in...
It's in California?
It's in Nevada.
Okay, well, there you go. I can definitely look into that for you guys, but I have a feeling that that's not something that would fly here in California, though.
It wouldn't surprise me.
It wouldn't surprise me either.
Yeah. California is actually very strict when it comes to a lot of things, like even mortgages. So there's laws on how much you can charge without having a mortgage broker involved.
We had that problem with one of my first loans. I had an 18% return for the first private money loan I did. And then we got noted for like some kind of like, hey, you can't do this percent, blah, blah, blah. Yeah. And so we paid on the side.
You can do it on the side. That's fine. But as long as if we're insuring it, if we're drawing the documents for you,
I remember this.
Then we cannot.
You're maxed out or you're capped out.
We're maxed out at 10%.
Yeah, because we were wholetailing it. So we knew we were going to pay more because it was a short period of time. So I offered 18%.
And I've had clients who have done that before as well. But it's just because we are insuring the transaction. We're insuring the lender. We are the trustee that's listed on the deed of trust. So when it comes to foreclosing, because we're a part of all of that, our company limits how much we can charge. And it's really not even the company. We're following, there's California Constitution.
Laws. Yeah.
So we're following there.
Well, Love, we've talked a little bit about seller financing. We did a little bit on foreclosures. I know we wanted to talk about a couple other niche things that go on in escrow. What's the next one you want to talk about?
Let's do subject twos.
Let's do it.
This is something that's been coming up a lot for me. So there is some confusion with people when they say subject to. So there's three types of things that you can do with taking on a property and there's already an existing loan on the property. So we'll start with assumptions. That's the easiest one. So assumptions are a form where you are actually formally taking over someone else's loan. You're removing them as the borrower and you're being put in as the borrower.
Do most loans allow assumptions?
Some do. I personally have yet I've seen one person do this before.
And so when people are marketing on the MLS or talking to a seller and they say, oh, the loan is assumable, that means that it's all going to be documented. And so you, Loveneet, have the first loan. But at the close of this escrow, Loveneet's name will not be a part of that loan anymore?
Correct.
Okay.
Yes. So if you're buying my property and you're telling me you're going to assume my loan, you're going to reach out to my lender and actually sign loan documents and then become the borrower.
And be pre-approved
Yes.
and meet their criteria.
Yes.
And
correct.
you will no longer be associated with property on title or with the loan or anything. Love is completely out.
Correct.
That
Yes.
seems the cleanest.
Yes, but not a lot of lenders will do it.
Right.
Yeah.
Of course,
And it's
'cause
more-
they want
more
their money
requested.
back.
Yeah.
Yes,
If
exactly.
you're assuming it, it's probably because the interest rate's low.
Yes. And I have a feeling that we'll probably start to see a lot more of this. I already have started to see a lot more of the creative financing that people are doing with taking title subject to and wraps and all-inclusive deeds of trust. So the next one's subject to. You're literally just taking title subject to that person's loan. That person is still legally responsible for the payments. They're still listed as the borrower. We would have everyone just sign a disclosure that the customer is taking title subject to this loan, and that's about it. Like there's no other paperwork that gets done. So that debt is still a part that it's still associated with that seller.
Gotcha.
So it's still on their credit report.
How do you guys deal with the insurance on a policy like that? So, I mean, the deed did transfer, but the loan is still in place on an asset that's been sold.
Correct.
I don't even understand how that could work.
So that's where subject tos and wraps get kind of tricky, where you would there's different ways where you can go about handling the insurance. I would say that you probably need to have a second policy.
That's what I've heard is you get a second policy.
Correct. Whenever there's a discrepancy between who's borrowed money against the property and who the actual owner is, insurance is not happy. So if you have, and the lender can get notified if you cancel your policy on anything that I've done loans on, any private financing, I get notices every time somebody cancels a policy. And you check and make sure, because that's your money that's tied to the property.
Right.
So you want to make sure that it's protected. And if the lender gets a cancellation notice, they're going to go digging and find out that the property exchanged hands.
Right.
So it's not to say that you can't do that. Like if I have properties where I took out a loan in my individual name and then I transferred it to an LLC.
We've done that.
Yeah. Due on sale clause didn't get triggered on that, even though my insurance is getting updated with who now the record owner is. And those notices probably went to my lender as well, but I've never been contacted.
Right. And you're not an insurance agent, so this is all just our personal opinions. But
Correct.
The way that you've done it, and I think the way that I've done it when we've done this kind of same thing, is we add just additionally insured. So you'd have,
That's the other way to do it.
You have Scott Farrow, Cade Barrett, and then our company is EBI, so then EBI LLC, right? So we have all three of them, and then the lender on top of that.
Right.
That's, I think, what I've heard. Or getting, like what you said, a totally separate additional policy.
Correct. When it comes to the title aspect of it, we do not get involved in the insurance.
So you don't issue any title insurance.
We issue title insurance. We don't issue fire hazard insurance.
Right.
So we're not, and we don't involve ourselves in that. We actually have disclosure signed and by all the customers, where we tell them you have to deal with the insurance.
That makes sense. How does that work for the title insurance? Is it more expensive when you do a subject to?
No, we still issue a policy. There's an exception on your title report that says we're not.
If the bank comes back.
Yeah, if the bank comes back, then anything that has to do with this exception, with this mortgage, you cannot file a claim on.
Cool.
Yeah. And then the other one that we have, which I've started to do a lot more of, is wraps and all-inclusive notes. So that is where there is a formal agreement between the new buyer, the seller, that they are going to make payments to the existing mortgage. So there's a couple of ways to do it. We would draw an all-inclusive note and deed of trust, though, to start. The customers have an agreement on how much is going to be paid. We'll use simple numbers. Let's say the mortgage payment is $1,500. Seller says, I want $2,000. I want to make a little bit of money off of this transaction. So $500 every month will be pocketed by the seller, and then $1,500 will go to pay towards the mortgage. There is actually a deed of trust, though, that is recorded against the property that ties the agreement between the buyer and the seller together with the existing mortgage. So this kind of protects everybody that's involved. So the buyer is they have a formal agreement. From a seller standpoint, I think it offers the most protection, because what if the customer stops making payments? You then have the ability to be able to foreclose and get the property back if they stop making payments on your mortgage. This is also where servicing companies come into play a lot too, because what if I'm selling my property and I'm doing this all-inclusive note to Joe Schmo down the street, and I don't know if he's going to make the payments to me or not.
Right.
So I would be less likely to lend the money and do an all-inclusive note if I don't think that this person is going to make the payments back to me. So having a servicing company involved will help ensure that the payments are being collected from the customer and that it's going to the mortgage company as well.
Right. So what you're saying is, like, if you're, somebody like us where we have a prior relationship, there's trust, you're less likely to check to say, hey, are Scott and Kate actually paying the $1,500 on top of giving me my $500?
Correct.
But if they pay it directly to a servicing company and you pay the fee to the servicing company, then you have that feeling like, okay, they would notify me if this is not getting paid.
Correct.
Gotcha.
And even as the borrower, if you're making payments to the seller, are you going to trust that the seller is actually paying the mortgage, or are they keeping all the money?
No, I would always use a third party.
Correct. That's where the servicing companies definitely come into play here a lot.
Do you have an idea of how much servicing companies cost?
Yes, I actually just got some information yesterday. It's not nearly as much as I thought it would be. It's like $13 a transaction or something. Like they charge you charge you a couple $100 to set it all up, but then it's not very much at all. It's definitely recommended that you utilize a servicing company.
Okay. Can we run through like a scenario? I was thinking about this while you were talking about this all-inclusive. So, for example, I have clients who they want to sell their house to buy the next house, even though they know keeping this house is probably better because their mortgage is lower than market rent. What if I went to them and I said, hey, I'm going to buy your house from you. I'm going to give you round numbers. I'm going to give you $15,000 because they don't have a ton of equity. But hey, I'll give you $15,000 and I'm going to take the property and start renting it out. And they say, well, you're not giving us very much cash. We want to make also $100 a month. Okay. You're saying that you could go and we could go to escrow and we could say, hey, Scott's going to give $15,000 to, Mr. and Mrs. Seller and $100 a month. Can you please put this all together in you called it an all-inclusive?
Yes, an all-inclusive note. You can also call it a wrap.
Okay, and so you do the wrap, and at this point, the seller walks away knowing that everything got done through escrow and transferred right. I'm taking over subject to the existing mortgage, because I'm not assuming it, and then going through a servicing company and having it all paid?
Correct.
And that's all something that you've seen before?
Yes.
What the heck?
And that's something the servicing company, all that gets dialed in, all the blocks fall into place during escrow, and when escrow closes, everything's dialed in.
Yes.
Wow, talk about overthinking it. This makes it way easier.
Yes.
And the client's happy because they have a return. So you're like, hey, you're not an owner, but you have a monthly cash flow of $100.
Correct.
So it's not like you just made $15. As long as I'm paying on this house, you're making $100.
Yes. Now, I personally considered doing this with one of my properties because I was one of those lucky ones that has a rate of 2.25% on one of my mortgages. Oh, no. And I considered selling the home at one point, but I decided not to. I have tenants in it now. But when I considered selling the home, I looked into doing an all-inclusive note with someone. The only issue that I ran into was that debt is still going to, of course, be tied to my name. It's still going to show up on my credit report. So I reached out to Mike Lowe, who I use personally for my loans too. And he and we checked with their company to see how that debt would affect my overall debt to income ratio and how would it affect my ability to buy another home later on down the road. So I would be okay, but I wouldn't be able to actually use that note for interest income until the 12-month mark.
Right. And that's typically what I've seen before.
Yes. So that was just something that I needed to take into consideration, that there still is going to be this debt that I have, instead of it being an asset for me if it was just a regular note. To be able to actually utilize the interest income, I would have to wait 12 months before I could purchase another property.
But then after that 12 months, that $100, or let's say in your case, maybe it was $400 or $500 a month. After that, then they could account for that as income?
Yes, they can account for it as income, and that debt essentially
is removed because somebody else has paid it for more than
Correct.
12 consecutive months.
Yes, correct. So I'm not hit with the taxes and insurance on that property.
Right. Wow. That's kind of interesting. That's a new way of thinking about it.
Yeah.
How do you feel? I want your honest opinion. How do you feel about all the creative stuff? Do you feel like this is good for sellers and buyers, or do you feel like people are maybe starting to really flirt with gray lines and start stretching deals that maybe aren't deals?
I think as long as everyone that is involved in the transaction understands how it affects their situation, I think this is all great. I personally love creative solutions. Right now, with interest rates being so high, I have seen a lot of people doing this creative financing. As long as it's a solution for everyone, then I think it's fantastic.
Yeah.
So as long as you don't have someone coming in and taking advantage of a client, I mean, I think it's fantastic, though.
Well, do you guys find yourselves having to, say, buyer or investor A and seller A, they agreed, escrow's open. Do you guys ever find yourselves in a position where seller A is only calling escrow and you guys are having to sit there and explain and do everything out to the seller and kind of be the seller's babysitter?
Yes, that happens all the time.
I can't believe you guys even do that. I feel like the answer would be you need to talk to an attorney.
There's some things that we can answer.
Or talk to your buyer who is the paperwork you signed it with.
So there are times where we have clients who call and ask questions, and I always encourage the questions. There is a point where I can't answer questions anymore, though. It gets to the point where, yes, you need to talk to your CPA, you need to talk to your attorney. I can explain basic stuff like what we're doing here today. But when it comes to everyone's specific situation, you need to consult with a professional.
Yeah. No, and that makes sense. I mean, you start really looking at convoluted scenarios where it's super unique and personalized. Like, everybody's situation will be different in a creative world, right?
Correct.
The down payment, the terms, everything is different and unique.
Yes.
Interesting. You had a couple other things on here. One was probate, I believe.
Yes.
And I'm interested in talking about that because I did get my probate certificate or specialty certificate back in December. And I really enjoyed it, but I think there's a group of investors who call me all the time about probate and who are like, hey, I know this neighbor died. I want to buy the house. And I think it's interesting to hear what you guys need in order to facilitate an escrow.
Sure. So a probate ends up happening whenever a client is entitled to a property by themselves. If they pass away, the heirs to the estate need to go through the probate process. The customers will have to hire an attorney. Well, you can do it without an attorney, but I don't recommend that. Yes, you can do it without an attorney, but I personally would never do that. There's certain paperwork that has to be filed. There's notices that have to go out. If you have a client that doesn't have an attorney, I mean, honestly, if I was buying the property, I would say, I'll hire your attorney for you. Like, that's how important it is, in my opinion. So the clients will need to hire an attorney. They will go through the probate process. Once you have letters of administration or letters of testamentary issued, that document will say who is authorized to sign on behalf of that person's estate.
Right.
It will also indicate if the client can sign with full authority or if they need the court's approval to be able to do anything.
Right.
If court approval is required for a sale, for example, there is an order that has to be signed by a judge before we can close escrow. And that gets recorded concurrently with the letters of administration.
Right.
Letters of administration get issued to the client. We need a certified copy of that document from the county in order to record with our documents to clear the record that this person is now deceased. That's why they're not signing the grant deed.
Right. The
The other thing that we require is from the attorney's office, there's several notices that go out. We like to have copies of those, just regular copies, not certified copies. We like to just double check to make sure that everyone was notified that was supposed to be notified, just so that we're protecting ourselves from any claims in the future. Because I have had people call me out of the woodwork where they said,
you sold my, so-and-so Aunt Sally's house.
Yeah, exactly. And I want my fair share. I've had investors call me and say, I need my grant deed because the heirs of the house showed up and I need to show them that I now own it.
Yeah. So, what's kind of interesting that you bring this all up is when I have probate deals, I have the conversation with them. Hey, are there any family members that you can think of who may come up out of the woodwork in the middle of this flip and say, you're working on my house, stop? Yeah. And I always ask because I've only had it once where they said yes. And they said, well, I do have a niece who believes that this home is hers, but it's not. And here are my orders and letters, and here's all this. Yeah. And I'm like, okay, but at least for me, I always put a note down like, okay, what's her name? What does she look like? Like, who is this person? Does she local? Because then if she pops up, I can say, hey, you know what? Coincidentally, I already heard about you. Here's all the evidence. Like, go talk to an attorney, and then you can come back and tell me if there's a problem.
Right. Yeah. People can make claims to the property.
That happens.
Yeah.
So you did like a super over the top for many people here. So if we can go back real quick, the two things to look for you mentioned were if they have full authority or limited authority.
Yes.
And that's on the letters of administration. And if they have full authority, consider it the green light that you're working with the right person.
Yes.
If they have limited, expect there to be delays and expect there to be court hearings to approve the price and everything like that, right?
Correct, yes. Even when they have full authority, attorneys should also be sending out a document called a Notice of Proposed Action.
The NOPA.
Yes, and then any heirs to the estate have, I believe it's 15 days to be able to respond to the Notice of Proposed Action. If there's any objections, then at that point it can be dealt with. But if there's no objections, then you're good to proceed. The clients can also, the heirs to the estate can also sign off on the NOPA, agreeing to the sale, and then we can proceed before that 20 or 15 days is up.
Right. So like you have a couple siblings and they're all in agreement. They can just waive that 15-day period.
Correct. Yes.
Cool.
What issues do you guys encounter when a seller ends up only having limited authority? And like Scott had said, price, terms, all of that has to be approved by the court. Even if you have a signed document saying, we're going to buy it for $200,000, the court can come back and say, no, that's not going to work. How does escrow then proceed with all those parties involved?
So if court approval is needed in order to close the transaction, you basically have to wait until the very end of the transaction to start going through that process of getting the approval, because the price could change. And all of those things are detailed out in the order, price, credit, commissions that are being paid, any additional invoices that are being paid. So all of that has to be addressed in the beginning of the escrow, and then once we get closer to closing, then everybody can get on the court's calendar to get approval. So the biggest thing that I really see is just delays, because you have to wait for the court to approve of the sale.
Gotcha. Do you have a lot of people open escrow for probate deals not knowing?
Not knowing what?
Not knowing that it has to go through probate?
Yes.
Because I would guess that a lot of people who don't understand how it works, if they see a will, they're just going to automatically assume like, well, there's a will and it says my name and I can sell it, and they go to sell it and then they realize they have to go through probate.
Yeah, no, that happens a lot where someone says, well, my Aunt Sally left the property to me. It says it right here, but we can't go off that. We have to have someone actually appointed on behalf of that person's estate in order to sign off on the property and then distribute the money accordingly. Yeah. That's another thing too with money. We pay the estate. We don't pay the heirs.
Of course, right. So they have to set up a bank account and everything named perfectly after the estate.
Correct.
Is there ever a scenario where probate is not needed?
Yes. So I recently had this happen where a client was entitled to the property as an individual. They forgot to put the property into their trust. They had a trust set up. And the daughter ended up contacting me. She said, what do I do now? And I said, call an attorney. There's a document that can be filed in the court. It's called a Hegstead order. It's basically where you petition to the court and say, oops, I made a mistake. And this person is now deceased. We need to put the property into the trust. So that's one way to avoid probate. The other way people try to avoid probate is through a document called a transfer on death deed. This is something that is not really like the recommended way of doing handling your affairs when it comes if you pass away. But I have seen a lot of people where they're on their deathbed and they're signing these documents to transfer the property to someone else. When it comes to one of those transfer on death deed, once the client has passed away, then the heirs need to sign an affidavit death of transfer and record that with the county. We have to then wait 120 days from the date of recording before we can close escrow. And we have to get underwriting approval on all of it too. So we have to make sure that the person was of sound mind when they signed the document.
Just a timeout. Imagine if you're on your deathbed and your family's like, hey, you didn't plan ahead. Like, I know that you're literally like, these are your last moments, but sign this paperwork, moving your house that you're going to like have to give to me.
I know.
So if you're trying to not be in that position, I always give the advice based off of what I've heard from you and from our attorney is that always keep your homes in a trust.
Yes, correct.
Why is that a thing?
A trust completely avoids probate. You set up your trust, you list out who is going to sign for your trust, who's getting what. All of your wishes are laid out. There's no guessing as to what is supposed to happen. So a trust completely eliminates needing probate.
So if you go and you're an investor and you see that it's a trust on title, can you feel pretty sure that as long as they say that they can prove that they're the beneficiary of the trust or the trustee, they're good to sign?
Yes. So
what do you need to prove for that?
You need to show the trust papers. We would, if you guys, for example, if you had a client, you're trying to purchase their home, get a copy of their trust papers, send it to us so that we can read through them and make sure that you're talking to the right person.
Okay.
Because sometimes there might be one person thinks that they can sell the house, but really we need all three successor trustees to sign, or we need approval from the other siblings, things like that.
Right. That's interesting that you even mentioned that because I didn't think about that. There was one last thing, and this is what it was because we're running low on time here. I know that you're busy. Power of attorneys. I hear so many people who are like, no, dude, this person can sign for their aunt or this person can sign for mom. And I've seen 3 or 4 people open escrow and then they call me and they're surprised that you guys said no to the contract because you're not even a legally binding contract.
Correct.
What do you guys need for a power of attorney?
So to start, we need to see the power of attorney. There's a lot of things that go into a power of attorney review. For starters, we look to make sure that it says that they have authority to be able to sell real property. It has to be very clear that they can sell real property. We look at the date. If the power of attorney is 40 years old, no, we're not doing that.
What's typically the length of time that it should be less than to be pretty good?
Honestly, like dated within the last 2 years at the most. Okay. We have approved other powers of attorney before.
Do powers of attorney expire?
Yes.
Okay.
It's like I have powers of attorney that I've drawn up. They have an expiration date of like 2 years. So.
Got it.
Yes.
Okay.
But that's just what I do personally. And then I go to my attorney and I re-execute. I check my estate planning once a year and I always do it around my birthday.
Of course.
Because I like to reevaluate, do I still want this person to be my successor trustee? Do I still want to give money to this person? Because people's minds change. People come and go out of our lives. Like
you're not married with kids, so it's not like a super easy, it goes to this person, then this person, then this person.
Exactly. So I've changed my trust around several times. And I do personally recommend that you do that and look at your estate planning so that if something were to happen, you have the right people in place to honor your wishes.
So the power of attorney has to explicitly reference real estate power of attorney.
Correct. And
it has to be dated recently. We're just going to say recently with like air quotes, something
That's what
newer
we
than
prefer.
the
Reasonable.
last 2 years is what you would like.
We prefer that, yes. If the client is able to execute a new power of attorney, we prefer doing that too. And that's something
In
that...
escrow?
Yes, and we can draw the power of attorney. We do not charge any extra fees to draw a power of attorney.
Yeah.
Nice.
It's all included within our escrow fees. The client just pays the $20 to record it at the close of escrow if we use it.
What about the of sound mind thing that you were talking about?
I recently I have a lot of clients reach out to me about this. So we double check, we ask the questions. Does the person understand that the property is being sold? Were they of sound mind when they sign the power of attorney? There's a judgment call that we make if a client comes to me and wants me to notarize them. I mean, I'm just having casual conversation, but I am assessing, do they understand what they're doing?
Right.
So I've been in that situation before where I had an elderly woman come in. She was signing a deed and transferring the property to her son. She did not understand what she was doing.
Right.
And it was very clear to me she was repeating old stories, not answering my questions. And I had to tell the family, unfortunately, I can't notarize her. You're going to have to
Just to see a physician or something?
Yeah, she needed to have a conservator appointed to act on her behalf.
Gotcha.
Yeah, so she can't. It's like sometimes with people, it gets to the point where they can't execute a power of attorney. They can't have someone act on their behalf. So then you have to go through court approval to have someone appointed on their behalf.
Gotcha. And so if you go through a conservatorship, I guess this kind of fits into the theme. If it's through a conservatorship, what documentation do you need there?
There's a document that would be signed by a judge that shows who can act on behalf of this person.
Gotcha. And that's pretty much all you need.
Correct.
Cool.
Sweet.
Holy crap. We just covered so much
There was
niche
still
stuff.
more on my list, though.
I know. Do you have a little bit more time? We
Sure.
got a couple more minutes
Sure.
here. The last big thing that you had put here is what happens when somebody sells a property but their spouse is signing off or is not signing off and has liens?
So we'll talk about buyers real quick.
Okay, so buyers and liens.
Buyers and liens. We do not check for liens on buyers unless they are, we call them super liens, so restitutions. If you're in trouble with the United States government,
IRS.
no, not even
support.
IRS. No, none of that.
None of that?
IRS, child
I know, I was
support,
gonna say child
state
support.
tax liens. We don't check for that anymore.
What?
For buyers?
For buyers.
For sellers, you do.
For sellers, we do.
Okay.
Buyers, though, we do not check for those liens anymore. So you can be a buyer with liens up the yin yang, and we will not require for those to be paid. This policy changed a couple of years ago. If you have if you're purchasing cash, we can show them on your title policy if you want us to check your liens. But if you are moral at the end of the day, though, we don't check the liens for buyers. Sellers, 100% we do. The same applies, though, with any spouses that are signing off. We don't check for their liens either. We check restitutions, and I'm sorry, we also look for bankruptcy. You can't purchase a home if you're in bankruptcy. And then if you have any liens, though, at the time of closing, those then fall behind the new purchase money deed of trust if you're purchasing the home with a loan. And when you go to sell the property, all of that stuff is going to come up.
It's going to pop up.
Gotcha.
Yeah.
So if you walk into a purchase and you owe the IRS $80,000 and you're back behind on child support $100,000, the mortgage is still going to be the first position, and then anything in surplus of the mortgage then goes to pay off IRS and child support. What happens if the balance doesn't equate? So say, for example, you owe $100,000 on your mortgage, $100,000 to the IRS, and $100,000 to child support, but your home is only worth $190,000. Can you sell the home?
Yes, you can.
And then just one of these other two lien holders, the other two liens are going to still be in existence, or how does that work?
No, so I have helped people with basically doing like a short sale with the IRS and the state. We can reach out to them. There's paperwork that we can help with sending in. And we essentially petition to the IRS or to the state and say, look, this is all the money that we have available.
Like, I owe you 90, but here's 60 and call it good.
Yeah, and they'll release the lien from the property.
Gotta love the government, baby.
Yeah.
Dang.
Yeah.
If I get in trouble, I'm calling love. Interesting. Okay. And same with spouses, you said. So
Well, so spouses is a little different. Now, is a situation that I came up with actually with an agent in this office. He called me last weekend and said, "Hey, Lev, I have this client where she was going through a divorce at the time of her purchasing the property. Her husband signed an interspousal deed because California's community property. So if you're legally married, your spouse has to sign off on the property."
Right.
She was informed at the time of closing that there are liens against this. Yes, against the spouse. And she agreed to have those show on her title policy. Well, I guess she forgot that she did that. So now she's selling the property, and the agent called me and said, "Hey, is this right that her husband's liens are now attached to the property? They are now divorced. He signed off on it. I don't understand like how this all works." And then I ended up contacting the title department, and I asked them what happened. Did we miss it? Because if we missed it, then it's a claim on her policy,
right?
Because we didn't disclose it to her. But if you
disclosed it, then
if we
there's not much you can do.
Correct. And at that time, we were checking buyer names for liens, and we disclosed it to her.
So was it like a credit card lien or something, like credit card debt, or?
He had several liens. There was a state tax lien. There were liens with the Fresno County.
So she had to pay those off in order to close.
If she wants to close, I don't know what ended up happening, but if she wants to close, she has to pay off all of his debt.
And they were legally divorced?
Yes, they were legally divorced, and they've been legally divorced now for like 5 years. So moral to the story, if you're getting a divorce, you might want to like get your divorce finalized before you actually purchase the home.
Now, would there have been a way to not have, for her to not have gotten herself into this situation when she was buying?
The buyers.
Well, we were checking the buyers at that time.
But nowadays, you wouldn't have caught that, and then it could be removed.
Or it wouldn't have popped up when she sold because you guys.
No, it would still pop up.
It would pop up. Yeah.
Oh, it still would pop up
because they check when you sell, but when you buy, they're not checking.
Correct.
So like you and I go in to buy a property, and one of us has some kind of estate lien. They're not going to catch that until when we go to sell the flip, and they say, "Hey, you owe $25,000 to the state, and here you go. You have to pay that now."
So if you're a buyer, I would ask the title company, "Hey, can you check my liens?
Just in case.
Check my name for liens."
So you don't buy the property if you actually do owe it and you don't intend to pay it.
Right. Or you could buy it and just deal with it later on. That's what some people do.
So you guys don't default check, but by request, you can still check if the buyer asks.
Yeah.
And what do you need to check? Like social security, name, last four addresses?
Last four of their social and date of birth. That's all we really need.
Ooh.
Boom.
Yeah, it's pretty easy. I have some people that call in to ask, "Hey, can you run my name?" And we'll do it. As long as your name isn't like Jose Gonzalez.
Right. It's not something that's like super common.
Yeah. Loveneet Bains, you don't even need my social and date of birth. Like, it's going to be me.
That's
only one. Comes up, it's me.
That's exactly right.
Scott Farrow, it's you.
That's pretty unique.
Yeah.
There is another one in Fresno.
Another Scott Farrow?
There's another Scott Farrow in Fresno.
Oh, interesting.
Yep.
Hopefully he doesn't have any liens.
I hope not, because I would be paying him. Well, to respect your time, we appreciate you coming on last second. Is there anything else that you want to leave the viewers with? They're new investors who may have questions about escrow. Is there any way that they could reach you?
Or even seasoned investors who may need a reminder on how to handle themselves during escrow.
You guys can always contact me by phone or email. I'll give you guys that information. You can put it at the bottom of the video.
Cool.
Boom.
Thank you much.
You're
we
very
appreciate
welcome.
it. We are going to have you come on. Maybe we'll do next time you come on, we'll do a breakdown on a specific transaction and walk through what each document that we talked about was.
Sure.
Or were, so that we can talk through exactly what you're looking at and maybe go through line by line. Hey, this is kind of what's important to note on a prelim. This is what's important to note on a closing statement, something like that.
Yeah, we could totally do that.
Cool.
Let's do it.
Thanks for coming back on, Loveneet. We appreciate it.
You're
Thanks,
welcome.
Love.